Today I'd like to talk about 3 points coming up in the forthcoming budget. As an overview, the budget is meant to be one in which the Chancellor is constrained into trying to tap back on reliefs and try and raise money through stealth because he's not allowed to raise any rates of taxes. But I think it's a fair comment to say that the government's been doing this over a number of budgets, and one good example of that would be the restriction of loss relief for corporates over the last few years. The first area I want to look at is entrepreneurs' relief. A lot of commentators have said that this will be restricted or curtailed. Entrepreneurs' relief, just to remind you, is the ability to pay a rate of 10% capital gains tax on lifetime gains of up to 10 million in respect of business or trading company sales. What should taxpayers do? Well, it may be sensible to seek to precipitate gains before the date of the budget, for example by entering into an unconditional contract to sell your company or business. However, if you do this, it may be difficult to unwind that contract if the change doesn't get announced in the budget on the 11th of March. If it does come in, what can one do going forward? Well, perhaps you could try and reorganise your business so that the seller is a corporate with the ability to claim substantial shareholding exemption on a sale of the business within another corporate. Alternatively, you could leave the UK and try and realise your gains when you're outside the scope of UK taxation, or you could try a combination of both. The second area I'd like to talk about are the proposed IR35 changes. IR35 applies where you have a worker who's supplying his services via a personal services company to a contracting company. If the relationship between the worker and the contracting company, whether to contract directly, would be one of employer and employee, then PAYE and National Insurance can apply to payments made by the contracting company from April 2020. The difficulty with this is the contracting company may not have full information about the personal services company or indeed the worker's circumstances. And as a result of this, it may be difficult to apply. The law here generally is unclear. For example, in a recent case, Eamon Holmes was found to fall within this anti-avoidance rule, whereas in similar circumstances, certainly to a television viewer, Lorraine Kelly was found someone who wouldn't be an employee of ITV, and so she would fall outside the I-35 rules. But employers have to get it right, because if they don't, not only will they have to pay the tax, they'll also have to pay interest and penalties. HMRC have said there'll be light on penalties in the first year, but their definition of light may not be the same as the taxpayers. At the moment, all employers should have been and should continue to review any contracts they've got with personal service companies to see if they fall within the IR35 rules. But as I say, it's a difficult area of law to apply. One thing they should resist from doing is saying that all contracting service companies are going to be treated as falling within the rules, because that may result in them breaching their contracts with the personal service companies, and they may have to pay damages for this. The final area I want to comment on is HMRC's proposal that it will rank as a preferred creditor on insolvency of companies. Whilst I can see they would want to protect the tax base, there is a commercial cost to all the other unsecured creditors, the standard commercial creditors, who they will now queue jump. The issue here perhaps is that if the taxpayer company has deliberately tried to avoid tax by going insolvent, HMRC should be entitled to become preferred creditors to prevent abuse. But in the standard commercial case, it seems unfair that the commercial creditors should suffer.